What if I told you that a cow could have a big impact on your financial future? In personal finance, there's a concept called dollar cost averaging. At GenWealth, we explain it by telling what has come to be called the cow story. And we think that by learning how to accumulate cows, you can change your financial future. The cow story goes like this. Let's say you and I get together and decide we're going to fill up our pasture with cows, but we don't have the cash to buy all the cows we want at one time. So we decide we're going to buy a little bit at a time, like once a month. Sort of like you buy shares of the investments in your 401k plan or in your IRA. And much like your 401k, we're going to commit to a set dollar amount each month to buy our cows. Let's say it's $100. So we go to the cattle auction and find that cows are selling right now for $10 each. How many cows can we buy? 10, of course. Now we're in the business of accumulating cows just like you accumulate shares of various investments in your IRA with each contribution you make. Now here's where it gets exciting. In the second month, we go to the cattle auction and find that cows are now priced at $5 each. We still have $100 to invest, but now we can buy 20 cows. Our herd is growing, which is exactly what we want to happen. So the third month, we come back to the cattle auction and find that cows are now $2 each. This price drop now allows us to buy even more cows to add to our herd. Someone who doesn't understand our purpose in this little exercise might say, hey, your investment is losing money month after month. But we understand that by virtue of the price dropping, we can in fact fulfill our purpose, which is to fill up our field with cows. Likewise, you want to fill up your 401k or IRA with shares of the investments that you choose. And when the price goes down, that spells opportunity. Back at the cattle auction, we see that just like the stock market, the price of cows can go down and can go up. The fourth month, we find that prices are now back up to $5 each, which again allows us to add 20 cows to the herd. And in our fifth month, we're back at our original price of $10 per cow, which means our $100 contribution will buy us 10 more cows. So let's take a look at what we've done. We've made a total investment of $500 in our cow accumulation project. We've bought cows in a wildly fluctuating market, buying more when the price was low and fewer when the price is high. And looking at our graph, it doesn't look like an impressive investment. But when we do the math, we find that our $500 investment in cows has allowed us to accumulate 110 cows in our field. On our last investment date, cows were priced at $10 each, which means the value of our herd is now $1,100. Pretty good for a $100 a month investment for 5 months that didn't look too good in month 3. If you take the cow story and just exchange the word cow for the word shares of your retirement plan, you'll begin to see the opportunity that dollar cost averaging could give you. Remember, this strategy doesn't guarantee success and you have to stick with it when everybody else is thinking the market is going down, so it must be a bad investment, right? We know markets will go up and will go down. The cow story allows us to take advantage of what the markets will give you over the long term. And that's a strategy that could help you on your journey towards financial independence.